Cory, how are you, sir?
Well, I'm great, Matthew. How you doing?
All good over here. I'm just slightly disappointed by the fact that the uranium market, yet again, is failing to light up and delight shareholders. We're in a bit of a lull at the moment.
Well, therein lies the opportunity, Matthew, because the contrarian investors look at it because this is an incredibly dynamic space and it's setting itself up for an incredible run, I believe.
Right. Okay. Well, let's talk about that. We know about some of the big drivers. Obviously, utilities are not yet kind of jumping aboard, it seems. We've very little in terms of contracting going on out there, meaningful contracting going on out there. What we have seen is big movements, from Russia, China, mopping up everything that Kazakhstan has to offer, it seems. The West seems to have missed the boat there somewhat. So, I mean, what's your take on what's going on over there in Kazakhstan?
Well, it's over there in Kazakhstan, but my take is, some of that uranium or a lot of that uranium is at risk, and I say that because the Kazakhs are sort of caught in a precarious position. They're sitting right against China and Russia, and of course, we all know what's happening geopolitically. I do believe the closer ties to Russia there are probably long term a bit of a question mark, I think, for Kazakh production and security of supply, despite the way it may have felt over the last 10 years or so. I'm watching that space closely and seeing what might come of that. So that's a tough position to be in. So where do, let's call it, Western utilities turn to? Where do they turn to secure that supply in jurisdictions that perhaps aren't as closely linked to Russia or China? That is a good question.
Well, what is happening out there? Because it seems to be like all companies like we talk to say we need to be incentivized, we need the price to be right, and the price is slowly creeping up. Obviously well shy of $60, but it's obviously, and compared to 2 years ago, that's fantastic, but it's still not enough. We're all expecting this kind of hockey stick type reaction to not only the spot price, but the equities that we're all supporting or invested into. But it's still not there. What's it going to take?
Well, I think the hockey stick's there. I think it's just wound up for a slap shot. Yeah, that's using Canadian hockey terminology, perhaps. But I think the point is that is to come. And, as we saw even in the last cycle, it's a bit of a logjam and then it goes. And I think this time when it goes, it's going to be a sustained go. And I know we said that a year and a half ago, but I think that was just a step change warming up to what is inevitable. So what is happening out there? Well, I mean, it's well known utilities inventories, especially in the West, at least our U.S. market in particular, where, a lot of those reactors, large reactor fleet resides, have very low inventories. And they have to be having conversations right now about the contracting, the long-term contracting, because security of supply is the issue. And if you can't go out there and find it in the spot market, which looks like that's the case, then you have to go out and contract it. And being such an opaque market, we're probably not going to hear about it, what's going on right now, but you're going to hear about it in the next, I believe, the next 3, 6, maybe even 9 months. So, I think that hockey stick is just out in front of us, wound up for that slap shot. And, we're not even talking about, okay, you secure the pounds, but now how do you convert it and get it into the reactor? And I think that's a different question that's very concerning for at least for the last 10 months. So that's not
it has been. But again, there's a massive dependence on Russia for that in terms of their enriched uranium. They own a big segment of that market. And yes, governments are talking the game of, nuclear is now in the room. We can talk about it, but it's going to take time to deal with the enrichment component. It needs financing, it needs licensing, it needs permitting. It takes time. Are we 5 years away, 10 years away from being self-sufficient in this new deglobalized environment we live in? And what do we do in the meantime? I don't know if there's an answer to that. I mean, what are you hearing? What are you seeing? What are we going to be able to do?
What do we do in the meantime? I think you in terms of utilities securing that converted material for reactors, they better get on it, and I think that's just real. So right now it's somewhat stable, let's call it. But boy, to have 40% of your enrichment and conversion capacity sitting in Russia at the moment, that's not a short-term fix if it goes sideways. And I think it's just on that edge of going sideways. So you're correct. recognize the problem. You go, okay, well, let's put 40% more enrichment sitting in non-Russian hands. Well, I mean, that doesn't happen overnight. It's a high-tech business. You've got to permit it. You got to build it, get it approved and build it, and then you've got to staff it. This is all high-tech stuff. This doesn't happen overnight. And I think, that's just a fundamental problem sitting there. So what do? Well, you start building up your inventories where you can. And I think utilities are going to have to start doing that, because if they don't, guess what? They're going to be faced with a bit of a problem. And that's not an easy one to fix.
Right. It's not an easy one to fix. I guess the implications as uranium investors or investors in uranium equities, it sounds quite delicious. You're thinking, well, that's a nice cocktail for a sharp rise in uranium price. But ultimately, it still comes back to the problem that the utilities don't have the enriched uranium in whatever form they need it sitting there today. So there's a massive problem coming down the line. What are you hearing in terms of on the ground? Become like your ex-Cameco, you know a few people and you've talked to a few people regularly, I'm sure. What are you hearing on the ground in terms of the government's stepping in and actually doing something about that? On the enrichment side, I'm staying away from the uranium equities at the moment. Are there things happening in the background which are going to remove red tape? Is the funding going to be there? Is there incentives going to be there to kind of increase the capacity at existing facilities? Are the new facilities planned, or should we be looking elsewhere to solve our problems?
Elsewhere. Where would you look to solve your problems? I mean,
what I'm saying, I'm talking about non-nuclear solutions. If the whole nuclear sector is basically, kicking itself in the butt, which is what it seems to be doing at the moment.
Yeah, you're absolutely right. So yeah, there all are alternatives, but some of those alternatives we're trying to get off of. I think that's one of the keys here. What is your alternative? And there just aren't a lot that makes sense other than nuclear. So how do you solve that? Well, I think you're seeing it out of the U.S. The Department of Energy is starting to take this seriously, whether it's just at the primary domestic supply, or let's call it North American supply front, and incentivizing that in some ways. You're seeing incentivization on primary discovery and potential supply here in Canada, where you're getting credits now to explore for uranium. That's just happening in the province of Saskatchewan here in the Athabasca Basin. So, and that's just new. I think it just came out yesterday, actually, from the province. So you're starting to see this incentivization for uranium, for all critical metals, really, like copper, nickel. Nickel is obviously one of our big portfolio components, built around that whole story of generate the clean electricity, move it with copper, and store and deliver it to the end user with nickel. I mean, that's well known in our portfolio, Canalaska. But I think what you're seeing here is governments moving toward finding solutions and cutting that red tape, going, look, we have to do this. We've got to find a solution. Undoubtedly, when it comes to conversion for the West, it has to be either Europe or the US. I mean, those are the biggest nuclear fleets out there, non-Russian or Chinese. So you're going to have to see the US in particular, in my view, step in and go, we're just going to get it done. It still will take time. As long as you have that line of sight, it will give the utilities some hope that their security of supply will be there. And what that all means is that now you have North American domestic supply that might become even more important to feed into that conversion facility. So, I think it's a great scenario for explorers. It's a great scenario for mid-tier producers or even the large producers like Cameco. And that's all connected right into utilities. So it really is an incredible scenario shaping up. And those solutions will be had because this is a major issue on a global scale.
It definitely is. You talk about nuclear power now has the momentum in terms of that global energy transition, and you've got governments, nations, reassessing the benefits of achieving carbon neutrality via nuclear. So it's exciting time, but there's a big gap here, which is not being dealt with. And I think that's the thing that in terms of that whole energy transition conversation, concerns me and interests me. We better get back to all things uranium, though, in terms of what companies like yourselves do in an environment like that. Do you feel yourself... do you think you're more valuable as a result of that situation? Or do you kind of feel in the moment now, a little bit exposed by this kind of lack of, a cohesive, coordinated, consolidated effort by governments?
Oh, boy. do I feel exposed, or does the company feel exposed?
In this moment,
Yeah, in this moment, I think the exposure, in my view, is honestly to the positive, Matthew, and I say that genuinely because at the end of the day, there will be solutions made, and you're going to have to supply that primary uranium. And that's our game at Canalaska, is discovery of that pipeline of projects that is lowest cost. Hopefully, that's why we're focused in the Athabasca Basin, among the lowest cost sources of that uranium fuel. And, we've got multiple discoveries on the go right now. And I think the exposure to the upside, in my view, is that because we're in a lull, now is the opportunity for investors in particular to go, okay, now is the time to position yourself in this lull in companies that actually have something going on. There's something going on in the right jurisdiction that will feed into this whole story, this whole narrative of how do we get to carbon-free energy that's baseload like nuclear, and in an environment where you just have to have more supply found. And that's our game, finding the supply. And
right. The reason I asked, Cory, and I've got to say this, is you've obviously put out some news recently about optioning nickel project, and you talk about a spin out as well. It wasn't a case of, oh man, this uranium thing just is too hard after all these years. It's a case of, as you've explained, we need kind of green energy supplied with green metal into and delivered by another green metal. So it's the uranium, copper, nickel portfolio approach for you. I mean, why or maybe it's not. Tell me, why nickel? Why now?
Why nickel? Why now? It actually started 5 years ago, and no one cared about nickel. And I think that's the key. No one was thinking about nickel and how it fit into this whole clean energy transition. So I give credit to, just before my tenure at Canalaska, management and the board getting into the nickel and copper space. And why is that important? Because you simply have to tie it in with clean energy production, clean energy movement in copper, and clean energy storage and delivery, which primarily is Class 1 nickel, coming out of places like Manitoba and the Thompson Nickel Belt, among the largest nickel belts on the planet. So we saw the opportunity from a project generation perspective to fit into that very nice clean energy movement. And now what do we have? We have Tesla cars. We have all these vehicles, of which the batteries are largely nickel, among other things, driving around the roads. Well, that all takes discovery. That all takes production. And the big players in the nickel space have told me quite openly that they cannot source new nickel supply to feed into contracts. And now you're seeing companies, maybe like Glencore, maybe BHP or Rio Tinto, coming in and going, okay, we're going to change our business model. We're actually going to feed juniors, a little bit of money to go out and explore and hopefully make these discoveries. And we're seeing that happen just in the last 6 to 12 months. So what are we doing at Canalaska? We're positioning our district scale nickel portfolio, second only to Vale and Manitoba, into a spin-out company for our shareholders, trying to monetize it for them. They've been very patient over the last 5 years. We'll get that moving hopefully by year end and on its own and financed. And then we're also doing deals on the other pieces of that portfolio with a company like Valterra Resource Corporation, which has an interest in investing up to $9 million in 4 of our nickel belt projects. So, I mean, it's just an incredible time to start monetizing this. And if you think about nickel, uranium, yes, copper, yes, nickel, there just isn't enough known out there to feed all of this demand. And you're seeing it from the big companies that they're turning away contracts. Who would have thought that 5 years ago? And here we are.
I think the interesting thing you just said to me there was, it kind of reminded me about what's going on with the rest of the kind of the metal ecosystem. You've got base metals like copper, where, in fact, you all talk the game of supply, demand, gap fundamentals, and all of, we're running out of this stuff. It's harder to find. It's more expensive to find. There's less coming into production. So we're all doomed. Thank you. But we as investors are looking at and going, well, like realistically, which are the companies that we should be backing, because they've got real management teams with real assets, which are, more than likely going to become a mine. We don't particularly like the kind of momentum play, sentiment play. We kind of like that. The reality of this new world we find ourselves in, which is kind of like, anti-globalization, it seems. For you kind of quite rightly reference the fact that lithium companies are getting OEMs, automotive OEMs, battery manufacturers, etc., piling in, going upstream, investing in these companies. You're seeing it in nickel, a lot going on, M&A going on in nickel, a lot of JV going on in nickel, and a lot of money being made available to nickel projects, specifically. A little bit of copper in there too. Uranium, because it's so small, is not attracting those sorts of players, is not attracting that sort of interest, and certainly not attracting that type of new money into the space. I mean, I hope it does in the enrichment side. Maybe that's a conversation for another day. But again, for guys like you, you're a portfolio player and you're kind of the JV here, where you're getting a little bit of money and you're spinning stuff out. And you're kind of spinning the plates, as it were, to kind of keep relevant and keep going and keep the cash flowing in a non-dilutive way, which is brilliant. But generally, more broadly, the uranium explorer junior space is just not attracting that type of money. We've seen Sprott Physical Uranium Trust, but they've got their own model. They've got their own thing going on there. They're mopping up physical. There's no one big like that, no one financial like that, no one industrial like that coming in. It's just a lot of M&A internally to try and look a little bit bigger and a little bit more attractive, and maybe distract from the fact that they're not actually producing anything. But how's this space going to stay alive? That's what I'm intrigued by. When's the money coming in? When's it flow in?
Good question, Matthew. But I'm gonna take it back to the 70s. I'm going to talk a little bit about the Athabasca Basin at that time. We all know what happened in the 70s, right? We had the energy embargoes. We had all that sort of big nuclear build out coming. Everyone wanted to be in the uranium game. Well, where did that money come from? It came from big oil. A lot of the discoveries made in the Athabasca Basin were built around Gulf. All these big Chevron, all these large ESSO was in there in a big way, making discoveries. In fact, the Rabbit Lake deposits and Eagle Point, that was all Gulf minerals. Gulf, the big oil company. So I think as we move away from fossil fuels and energy production from fossil fuels, they're not going to go away completely. But as the world shifts toward that, I'm actually looking at big oil to be one of the potential sources of new investment into places like the Athabasca Basin. Now, right now, it's a bit of a small market for them, but it was a game changer in the 70s. And that's when a lot of the discoveries happened, is when that outside oil investment came in, because they're going, okay, oil's a problem. Energy production from uranium, yep, let's get in on that. The trick will be making the discoveries big enough for these big companies to come in and actually take a piece. So, that's a bit of amusing. But if you lean back on history, I think that's the type of investment that will flood in at some point. We're not quite there yet on the build-outs, the reality of the build-outs, the nuclear build-outs, probably mostly driven by small modular reactors, the SMRs. But that's going to be a bit of a game changer. And when the opportunity presents itself, I think you're going to see the Glencores of the oil space, for an example, coming in and wanting to be a part of that story. And that may actually include the full circle of nuclear, not just discovery and production of the fuel source. So I think that's a bit amusing, but I think if you look back at history, that's kind of where the big money could come from. And if you think back to the roots of in fact, when I was a young geologist 30 years ago, I hate to admit that, Total Manatco was actually very active in the Athabasca Basin, making discoveries at a place called McLean Lake, which is now run by Orano, the French giant. But that was Total Manatco. That's an oil company. And I think that's a fascinating piece that's a bit missing yet in this cycle, but could actually come. And it could be quite intriguing.
Yeah, it might be, because I guess things have changed. The oil companies are trying to clean up their act, certainly the public ones anyway. Getting out of lots of, quite frankly, very lucrative areas of their business, because they don't want to be perceived by activists as fossil fuel companies anymore. It's quite bizarre. So maybe nuclear, having kind of gone through that revolving door themselves, or now maybe back in the building, where they're being perceived as clean energy once more. So maybe it could be a nice avenue, but the trouble is the scale just isn't there. The importance is the scale isn't, and I just wonder whether those big guys will look at this and go, actually, I can't, because BHP's famously not really interested in their uranium, they're interested in their copper project at Olympic Dam. You've got oil companies perhaps trying to reinvent themselves, and will this come under the right banner for them? Will it allow them to make money? Would it be a PR stunt? Who knows? But who else is out there which is would be looking in? Do you think the consolidation model is the right way to go? We looked at what Cameco have done in the last couple of years. They've kind of added a few new strings to their bow, and maybe the more holistic view is the way forward. Do you think?
Yeah, holistic in a sense of the fuel cycle.
Just that full cycle delivery, right? So it's not just mining. We're not mining because one that's attractive because there's a kind of re-rate because I'm not a miner. Miners kind of get a negative multiple. You've got people further down the line and capturing the value the whole way down the value chain is quite good. And perhaps that's what utilities are looking for. It's like, tell you what, just deal with everything for me. I don't want to have to think about it anymore.
And that's exactly what I'm talking about. What is going to attract this big money in, these big players, whether it's oil or other? It's a part of their portfolio. And then what is going to attract in? It's the scalability. Now, in the 70s, that scalability probably wasn't there. They were looking at discovery, production, all the hype around it. They weren't in the cycle. And, if there's an opportunity to bring in, some of those big players out of the oil patch, for instance, that, could actually step in and go, okay, we're going to help you invest in conversion. That links them directly to the utility. Now, let's buy into the utility and actually produce power. And don't forget, Cameco did that for many years in a very low uranium market, $7, $8, $9 uranium. Cameco went out and invested in Bruce Power. It 33% interest, I think, and that actually gave them a ton of revenue and allowed them to build MacArthur the cigar, right? So I think there's opportunities there within the space beyond just the Athabasca or other jurisdictions for primary production for these big players. They're looking to go, okay, we want to move away from fossil fuels, not completely, but how are we going to make our portfolio cleaner, the ESG component? How are we going to make that look better? So one is, you're seeing them do it already. They're moving into solar. Okay. They're moving into wind. They haven't yet moved into nuclear. And I think it's a missing component for some of these former fossil fuel companies to actually go out and start investing in it. And now, has that started yet? No. But history says it absolutely could happen. So, especially if the government's going to incentivize it. What better way for fossil fuel companies to reinvent themselves and to get tied with the governments, providing a solution to the public that is, essentially carbon-free energy? Could be a great scenario. Yeah. History says it's happened before. Could happen again.
It could. And I'm just conscious this whole thing needs to happen in the backdrop of, you mentioned ESG, and it just kind of gets you thinking the number of projects which have been halted or stopped because of that, let alone the kind of First Nations type concerns which was not being addressed by the companies. That, you look today just at, Mountain Valley Pipeline project is, what we're saying is the court has basically stopped construction there. So all forms of energy are under close scrutiny, and nuclear is going to have to kind of, I guess, up its game, like all energy companies, and make sure that people understand what it's about. I think that there's got a little bit of a tailwind with these sort of SMR type delivery systems in the West, and it seems to have some kind of backing. Governments need to get out of the way of themselves and actually stop talking a good game and actually start helping. That's what it feels like, looking in from outside, just on the energy transition. But I'm not speaking just only as a uranium equities investor, although I definitely think that as a uranium equities investor, government needs to step up and help kind of bring this space together. Just in terms of just finishing off with what you're saying, I was even contacted as recently as yesterday, by some of the IR teams of of various uranium CEOs, uranium companies. They're a bit nervous, a little bit nervous about what's happening out there. Timing of all of this. Every year since I've been doing this, we've talked since 2019. September is the month where utilities start making decisions. Is it going to happen this year? Is it? Looks like the companies don't even know. So, what's your thoughts?
My thoughts are it's going to happen, Matthew. Absolutely, and why do I sound so confident in that? Because everything we've talked about today, it is happening. You're starting to see things out of Cameco and others where you're getting long-term contracting warming up. I mean, let's be honest, long-term contracting with Cameco in Q1, as an example, I think it was Q1, early Q2, actually almost matched all of last year's contracting. That's just at the start of the year. So I believe there's more to come. And I believe once it starts to flow and start to get that hockey stick model going on the long-term side, that's when everything comes along with it. And, some CEOs out there are probably rightfully nervous. I can't say I'm never not nervous, because you should be. It keeps you on your toes. That's good. But, from Canalaska's perspective, we're well funded. We did a fairly large raise, 8 to 10 months ago. We've got over $11 million in the bank as of this week. We have a lot of runway in front of us yet that, some of our peers don't have. And we're in a bit of a good state here as a company. And we've got good partnerships with Cameco, our West MacArthur joint venture, where we're drilling our high-grade Pike zone, 42 zones. And we've also got a very good partnership with Denison Mines in the Athabasca Basin, where we've got a brand new high-grade discovery only 3 months old, with them right near their Griffin and Phoenix deposits, where they're trying to put ISR production into part of the stream here, which, looks very promising based on the recent news from Denison. So we've got very strong partnerships. We're very well funded. I've got an incredible team with 150 years of Athabasca-focused experience on it. And we are making discoveries in the last 12 months. And it's just an incredibly good time for Canalaska. And I'm remarkably not all that nervous yet. But, we've got a good team. We're well financed. And I think we're in the right space for what is coming very quickly after that slap shot. And that's a goal. And that's Canalaska's game.